Welcome back. Hope you're having a good morning. Well, it's good indeed because we have the GST rationalization that's going to be playing out in the month of September itself. And everything, most of their questions have got answered late last night. Dipan Mehta, though, he's the man in the hot seat, director of Elixir Equities, who joins us. Hi, Dipan. Near term, there could be some kind of skittishness with regard to demand. But in the longer run, this is going to be very, very good, right? Could you tell us, if you were to give us two stocks that would be the top beneficiaries going by what we have heard on the GST rationalization front? Could you name them?
Yeah, Nigel, good morning and thank you for having me on your show. I can name only one stock and you'll be surprised. That name is Bajaj Finance because it is all encompassing all the GST benefits which come through, whether it is appliances or whether it is automobiles. That is one company which clearly benefits from higher demand for its loan products because a lot of these items are bought on EMI. And that certainly is going to benefit the volume growth for Bajaj Finance. So it's the kind of the best way to play this GST cut is through a NBFC like Bajaj Finance, which is India's largest consumer finance company and a formidable player in vehicle finance as well. Having said that, it's a company which we and our clients are invested in, and so our views could be biased to that extent. And of course, the second company, if I had to name, has to be M&M. I heard the interview. The management is quite guarded, but I think that internally, they may be rejoicing these cuts which have come because they are clear beneficiaries over there at a time when there's good momentum behind their products and the new offerings have been received so well. This clearly is going to be a boost for M&M and may lead to even higher market share for them. Maruti will benefit, but as I said earlier also, that the cut in EMI for small cars not material enough to really drive growth.
Yeah, no, absolutely. What else, Dipan? On insurance, what is your sense? I don't know if you heard the Niva Bupa management, right? As one of the newer ones, but what we're picking up is kind of a mixed bag. So it'll be a strange situation if you actually see some red on insurance names this morning as we open up. I don't know, but what your thoughts, Dipan?
No, Prashant, you're right. There's no confusion. Okay, whatever services they are taking, whether it is telecom services, internet services, commissions which they pay, a lot of other expenses except reinsurance they're going to pay GST on it. So effectively, I'm not sure how much of a reduction we will see in our premiums because initially I think they may bring it down to zero, but eventually when they recalibrate it, they may have to increase the insurance premium because all of these GST inputs will not be available and they will just lapse. So net you will see, of course, the reduction, but don't expect like from 18% to zero means an 18% reduction in the premiums in the longer run. So that's my view. Apart from that, I think one segment which needs attention here is also the apparel segment. And retailing companies like V2 and Vishal Mega Mart, to an extent even D-Mart, they also benefit because the GST has been cut from 12% to 5% for a lot of the items which are below 2,500. That even benefits footwear companies, low cost footwear companies like say a Bata or something. And that could also be a boost for demand at a time when the festive season is also looking very good. The marriage season is looking good. So this is an additional trigger for retailers which are in tier 2, tier 3. I think Trent also may be a beneficiary because of its low cost offerings. So that's also could be one of the stocks of sectors worth looking at and analyzing from a GST cut perspective.
Absolutely, yeah. I'm glad you put that on the radar as well. So, apparel below 2,500, footwear below 2,500, and V-Mart Retail, Vishal Mega Mart. I mean, these are the big names in that particular category at those price points. Dipan, just going back to autos for a bit, two-wheelers. Now, Bajaj, Hero, and Eicher. Let's take all of them very quickly. The biggest beneficiaries, I don't know, I mean, we know that Hero obviously is. Eicher, a small part of their portfolio is above 350cc. But from a stock positioning standpoint, and Bajaj Auto has been a big underperformer. So between the three, how would you spread your bets or place your bets? All three, 1, 2, 3, or none?
No, I think Hero MotoCorp, it's been an underperformer. And clearly, they benefit from the price-sensitive sector, entry-level consumer commuter motorbikes. So I would go with them. Valuations also are reasonable. And I think if the export pickup for Hero MotoCorp, you could see it inching up as compared to its competitors or peer group as far as stock returns are concerned.
And what about the Royal Enfield? I'll tell you what, Deepa, and just to give you a live, real case incident, 2008, I went to buy a bike. I went to buy that the normal standard, which was 85,000. I ended up buying the Machismo, which was 125,000 at that time. 2008, I'm talking about the 500cc. So for Royal Enfield fans, actually, it doesn't make much of a difference normally. But what is your take on it? The stock is not very cheap as well.
Nigel, every time we have the discussion on Eicher Motors, and this is what happens, I don't think this is a trigger for Eicher Motors, but I think the company is on a roll. Exports are doing well, domestic sales are doing well, the expansion of retail network benefiting the company. And I think high valuations clearly justified. You can see the monthly numbers also coming through, really well for that company. Having said that, it's a company in which we are certainly interested in as shareholders.